Hello, hello. Happy Thursday. Happy mini masterclass Thursday. It is November 14th. So effectively tomorrow or tonight at midnight, it will be halfway through the freaking month of November. You guys, I don't even understand how this is possible. I think I've said that on the last three because this quarter is just flying by. But here we are once again together, and I am going to review with you today everything you need to keep in at top of mind for the end, excuse me, the end of the year, which is right now. Like literally right now, we are at the end of the year. There is, in some of these cases, there's very little to no time to get these things done. And in other cases, you could roll it over into first quarter to tie some things out. Or of course, if you're our customer, we will be doing these things for you, or you can ask us to at any point in time, whether you're our customer currently or not. So without further ado, I'm going to jump right into our checklist. So we do have a resource that we are offering for free for you if you would like, which is going to give you all the check boxes of all of the points that I'm making during our mini masterclass. So if you would like that resource emailed to you, just drop a comment, guide, Guide, and we will send it over. And you know what? If you don't use the word guide and you just said, give me the free resource or something to that effect, I will still send it over to you. So just leave us a comment. If you're finding us on LinkedIn or on our YouTube channel, we check those comments as well. So please just let us know you would like the free guide and we will send it over. So first and foremost, let's talk accounting, right? Because that's what we do on the daily. All of the accounting year-end things that need to be done. And by the way, yes, I am sitting with a Christmas tree, but if you notice, it's a fall tree. It still has pumpkins. I'll show you because I think she's beautimous. So there is my pumpkin fall tree. This was my way of putting up my tree early, but not being one of those people that put up their Christmas tree early. So, you know, whatever, it works. It's working out. So anyway, okay, checklist for accounting. Follow up on unpaid invoices. The time is of the essence to be able to earn the rest of the income for this year. So if you're a cash-based business, that means you're only able to claim revenue for the invoices that you actually received payments on. If you're an accrual-based business, you're able to claim the income from those even if you haven't been paid. And the benefit to that would be if you, on the flip side, had expenses against that income that you wanted to write off. So whether you're a cash or accrual, you still want all the money you can possibly get in, I would imagine, by the end of this year. So start trying to collect on those, especially seriously overdue invoices if you can. Your customers may also want to get rid of their money at the end of the year because they have their own tax strategies that they're following. So your little reminders or your little push might get them to pay you because they're like, oh, then I can write this off for 2024. And that might be advantageous for them, which would be great also for you. Pay any overdue bills, especially if you're looking for extra write-offs or additional write-offs for this year. If you're profiting, you might want to look at, is there anybody I haven't paid yet that I could pay, that I should pay for work that they've performed for me? Get those payments made. And you need to remember that it has to be actually cash out of the bank, cash money out of the bank, not check recorded in QuickBooks, not a promissory note, not anything like that. It has to be cash out of the bank for it to count as an expense of 2024. You need to reconcile every single account on your balance sheet. I teach this over and over again to both business owners and accounting professionals because oftentimes the balance sheet accounts that are not a checking, a savings, or a credit card are overlooked. They're not reconciled on a consistent basis, or they're forgotten altogether. But every single account, active account on your balance sheet needs to be reconciled at least by the end of the year or beginning of next year for this year. So any loans, any lines of credit, any liabilities like not just your bills, but sales tax or maybe payroll tax liabilities that haven't been reconciled, child support. There's all kinds of things that you could have on your balance sheet that aren't being reconciled. So please reconcile them or have them reconciled entirely by the end of the year, so you know if you're looking at a big fat mess that you might have to go clean up, because I guarantee you, 1000% guarantee you that some of you out there are going to get into this task and go, oh my gosh, this is a mess. I don't even know where to start, what to do. And it's actually going to entail an untangling and an unraveling of information that's been put in inaccurately throughout the year. So jump on that, get your balance sheet reconciled, 100% of your active accounts. Now there's two exceptions to that. There's fixed assets and there's equity. Your fixed assets, you're not really going to reconcile until potentially even after the tax return is done and depreciation is added. That might be into the next year for you. And equity, that's not reconciled until you get your end of the year adjusting journal entry from your tax preparer that shows all the different offsets that they've done in order to make your tax return match your books. So those two sections specifically, fixed assets and equity, you can really wait until 2025 to even attach or address, I should say, and potentially even after your tax return is done, which means if you're filing an extension, that could even look like September of next year before that's done, depending on when you file. Perform a physical inventory count. So if you are an inventory-based business, you need to have that ending inventory number specifically dialed in by December 31st, as of December 31st. If you are a business that doesn't stock inventory but has purchased more than you sold in product in whatever it is you're selling, you also need to, at the end of the year, determine what the balance of those products that you purchased are, and that becomes an inventory asset adjustment at the end of 2024. So for example, we have a candy store as one of our clients, so I'll use that as an example. Our client candy store has purchased in bulk because that's the most advantageous way to do it, and also ramping up for the holidays. You want to be prepared for everybody that's going to come in and buy your product. But as of December 31st, whatever is left in her store that was purchased in 2024 needs to be switched over to inventory, because she didn't actually sell it in 24. Therefore, it is not a cost of good sold, because it didn't get sold. It's not sold. And then we just reverse those entries effective 2025, but for your 24 books, that is done. You want to clean up any unused or duplicated accounts. So in your QuickBooks, you might see accounts that you haven't used in years, or maybe this year you stopped using that one particular account. Or you might have duplicates because things happen. Names get abbreviated or not abbreviated. It can happen for vendors. It can happen for chart of accounts. If you've had multiple people working in your books, maybe somebody didn't take the time to see what you had existing and they just added their own. Maybe you switched accounting firms and one accounting firm did it this way and the new accounting firm's doing it that way. Let's consolidate and clean all that up by the end of the year. So going into 25, so you have clarity and your 1099 totals are accurate, your vendor profile numbers are accurate, you can actually do analytics on your numbers, and B, 25 doesn't have to be a perpetuated mess as well. Recording journal entries when received. So your tax preparer should, when they give you any kind of, okay, I've updated this, or I filed your return, or this or that, or you're speaking with the CPA who might be making adjustments, you need to make those journal entries. Now, maybe you don't make those journal entries, maybe we do, but we need to be communicated with that those exist. We need to know who's doing them, so maybe we can reach out on your behalf. All of that has to do with your ending balances for 24 and beginning balances for 25 being accurate, as well as your tax return matching your books. That's extremely important. Your tax return should match the final numbers of your books. Close your books for year end. Now, this definitely isn't going to happen until after you do your taxes, because you have to do those two things I just mentioned, your equity and your fixed assets and depreciation. All of those adjustments have to be made. and then your books can be closed. So you might have closed it through like November when when you're reconciling and you're ticking and tying everything, as long as every balance sheet account is done, every single one that's active. But then on December, I would wait, because then you can close the books effective whenever the tax return is done, and you have those adjusting journal entries that we just talked about. Prepare your year-end financial statements. This is a great time to start running your P&Ls and your balance sheets, just to start seeing how things are lining up. Does it look right? Do you see any red flags? I can tell you a red flag that comes to mind all the time for me is a customer came up to us at one of our expos that we teach at, and she was like, I don't know what to do. My QuickBooks says we made $6 million last year in sales. It shows $6 million. We know we didn't make $6 million, and we don't have the expenses to support $6 million. So our profit looks so insanely high, but we don't know what's going on. We don't know what to do. Running the financial report, running her P&L gave her that red flag, like, oh, we need to look into this. So even if you don't know what you're looking at or how to fix it or what it means, you know your business. You know by looking at something, this seems off. This can't be right. Either my expenses are way too high or way too low. My income is way too high. My income is way too low. You also might have a circumstance where things got kind of messed up and things have been being duplicated. I've seen payroll that's been duplicated before. I've seen a bunch of distributions that weren't distributions being put on the balance sheet that should have been on the P&L. There's just lots of things that you could potentially find. Running those reports, understanding that it looks correct, or starting to ask questions if it doesn't, is really important right now. Don't wait till it's January and there's nothing that can be done about 2024 transactions. Compare actuals to budgeted numbers. If you set a budget for 2024, let's start looking at those budgeted numbers. You still have 6 weeks, 6 whole weeks to do something about 24, right? Is that a promotion? Is that a sale? Is that a marketing campaign? Is that hiring? Is that firing potentially? Is it launching a new product? Is it pushing out a product sooner than you wanted, than you thought, because you need that revenue? Is it ramping up some sort of spend, an asset purchase, or something else to be in line with A, your budgeted goals, and B, your tax strategies that you hopefully have been talking to? If you're listening to your mini masterclass on Thursdays, you've hopefully been talking to your tax preparer about tax planning strategies, and you can put some of those into play and see how that then aligns with your budgets to actuals. It also then leads into, now is the time to start budgeting for 25. You can take your actuals from 24, whether or not you met your goals, they are your actuals. Take your actuals for 24 and start budgeting against 25. You're going to go into 25 so strong if you have that peace of mind of knowing, okay, I know how we did, whether or not we met our goals. Now you can gauge, okay, let's say I didn't make my goal. I'm down. I didn't make my full goal. What do I need to do to get there? Right? Because now you have the information of how far away you were from there. Do you want to increase that goal even further? Do you want to keep it where it is? Do you want to come back down? Because maybe you're like, yeah, this isn't actually realistic. You can figure all that out right now and go into 25 knowing exactly what you want to do with your business. Create a budget for the following year. I just said that. Analyze your cash flow statement. So if you're not analyzing cash flow, if that's something you haven't started yet in your business, I highly advise doing that, especially if you know right now you have certain events coming up. You have conferences, you have industry things, you have travel, you have bonuses that you want to give out. Do you give them out quarterly? Do you give them out annually? Do you give them out as part of your comp plan? You're going to need an influx of cash flow when those times come around. You need to be watching that and budgeting to where your numbers, as they ebb and flow, allow you to meet those goals. So cash flow statement assessment is wonderful. You can look and see when you dip and when you trickle up, and you can save and you can put stuff aside. You can budget for certain events and for the business as a whole. Missing W-9s, start now. I swear to the heavens, every year people say, oh yeah, they'll get it to me. They're good about it. And then we play the chasing your tail game up till the wee hours of the night of January 31st trying to process 1099s that were never collected. Best practice always and forever will be do not pay anyone a dime until you have their W-9 in your hand. That is just a best practice. If you've never done it before, it's never too late to implement that practice in your business, because you're always going to have W-9s to file if you pay someone over $600 in a calendar year and they are not an S Corp, elect, or C Corp. We have videos, we have many master classes on that subject as well. So if you're following us, you can look back on our page, or you can go to our YouTube channel and catch those. Year-end forecasting and projections. Now you have all year, you have at least 10 months of data that you can project with. Do you think next year is going to trend the same or different, and why? And then you can start putting those pieces into play for your budgeting and your projections. Set aside cash for estimated taxes. So here's a little side note about estimated taxes. Estimated taxes are for businesses that owe $1,000 or more when they go to file their taxes. If you owed $1,000 or more in 2023, you had to make at least that amount of estimated taxes for 2024. If you don't owe, then you don't owe estimated taxes. If you choose to not file your estimated taxes, which you don't really have the choice, but a lot of people make it their choice, you will receive penalties and interest for not having filed those estimated taxes. So you're still going to owe the tax, and then you're going to owe penalties and interest on top of it. So you're costing yourself more money to not have filed. However, going back to tax planning, there are ways that you can pay 100%, if not 99 or 98% of your taxes through payroll, and your business can absorb the tax liability, which lowers your personal income, and pay you to not have to have that tax lump sum at the end of the year. So there's great strategies around that. Again, if you haven't talked to a tax preparer, we have a phenomenal tax planning strategist that we work with. I'm happy to loop you in with her, whether or not you're our current client. She's exceptional, and there's so much that you can do still to this day, till December 31st. There's a bunch you can do to help yourself for tax planning. But you do need to set aside taxes. There is a misnomer that if you're a business owner, you don't have to pay taxes. It could be that you do end up netting out where you have so many write-offs that you legitimately don't have tax debt. However, the more and more successful you are and the more and more money you make, taxes are not an option. So do yourself a favor. Don't think you're not going to owe. Expect to owe. And if you don't, then great, you get it all back. It's like a little mini savings account. All right, so now we're going to go into business organization and compliance. So that was all accounting related stuff. That's all the stuff that we're already doing for you if you're our customer, or you need to be thinking about making sure is happening if you are just watching this for informational purposes. If you're looking for someone to make sure this is all done for you, you know where to go. So you're going to update your standard operating procedures. They're called SOPs. Now is a great time into the year. What has been going on all year that may be different than what you set out initially? Every time you hire somebody, it seems like they find little kinks and quirks about your current SOPs that don't quite work because of how they're interpreting things, because everybody learns differently and interprets things differently. So over the course of time, you may really need to update your SOPs. New softwares may be involved, new workflows may be involved. You may be missing or removing parts of it because you found something that automates and streamlines a part that used to be manual. Make sure all that stuff is updated, so going into 25, you're not working with erroneous information or confusion, or when you hire the next person, they can jump right in and know what they're doing and not have to fight with, oh, wait, this is the old thing. Let me update that for you. Business goals. We talked about reverse engineering your goals in a mini masterclass or two ago. We also teach it in our financial literacy workshop that we teach around the country. So important to set your goals and then reverse engineer them into actionable steps so that you can plan accordingly and you can meet the goals and you can budget and you can forecast and do all the things in reality, not just like, oh, I wish this would work out. I hope this works out. Update any mailing addresses. You want to update your employees' information, if they have been in your system for 3 years, have they moved? Have they had babies? Have they been married? Have they been divorced? Have they changed their name because they got married? Have they changed their social security number? Did they go into the witness protection? I'm just kidding. That was a little stretch there. But you want to make sure all that information is updated so that W-2s and 1099s go out correctly. You should be getting updated information from your employees and your contractors annually. I know it's a giant pain in the rear. I know no one loves to do it, but bottom line, things change for people all the time. A 1099 contractor may have gone from a sole prop to an S corp. They may have moved. They may be using a PO box instead of a physical now. You just don't know. So that's why you get those forms. Clean up your inbox. If there's things that you need to get rid of, you don't need anymore, if there's advertisements, if there's junk, get rid of it. Start fresh. There's a whole theory called inbox zero, where you use a delegation tool to actually ultimately task out every single email that you touch, and your inbox has 0 emails in it at all times. And then you're just going to the prioritization in your project management software. So I'm thinking about bringing a mini masterclass to you on this topic because I think it's helpful for a lot of people. I personally have never in my life been able to accomplish inbox zero, but I kind of want to. It's kind of a goal of mine. And I feel like it would really help me process through a lot of the noise and not let things slip through the cracks, because my inbox is like inbox 1 million instead of inbox 0. So it's a goal for me for sure, but that's something you can do now at the end of the year too. Get rid of all the clutter in your digital life. Standardize naming conventions. So everything that is a 2024 something, you could standardize a naming convention so that it's explicitly clear this was the 24 version, and then next year you have the naming convention 25, and everything's very consistent, easy to file, easy to find and research, all of that. Cancel any unneeded subscriptions, softwares, classes, anything that you know that you're not going to use or you don't need anymore. As you've updated these SOPs, maybe you found like, oh yeah, we no longer need this tool because we implemented the new tool. Cancel that subscription. Let's clean out a lot of that noise for your 2025 financials. That will also help you budget better and look at like your savings year over year as well in your business. Last 2 pieces of compliance. If you had a business before January 1st of this year, you have until December 31st to file your BOI, beneficial owner information filing, with the FinCEN department, which is a government department. Every single officer of a corporation has to file by December 31st. We are helping you file, but honestly, you can go right to the FinCEN website and file on your own behalf if you're willing and able to do that, but that has to be done by December 31st. Additionally, your reasonable compensation, if you are an S Corp officer owner, has to be done by December 31st. You have to meet reasonable compensation. This isn't a choice, just like taxes aren't a choice. This isn't a choice, but it's something a lot of people aren't aware of. And we're actually bringing it to the table now because we've seen so many business owners impacted by not having met reasonable compensation. And the government is actually cracking down more and more and more, and really kind of targeting S Corps, because the simple fact is there's a lot of people taking advantage of the S Corp tax advantages, but are not compliant. So they're not following their end of the deal. They're just taking the cake, right? So they're trying to crack down on that. So if your reasonable compensation analysis annually hasn't been done, you have until the end of the year to do it, to make sure that by December 31st, you have recorded at least reasonable compensation for yourself as an officer owner. If you don't have the money to pay yourself reasonable compensation, that's okay. You just cannot have also taken distributions out of your corporation. So the way it works is you have to be on payroll if you're an S Corp officer owner. You have to. If you're not on payroll and you're just taking draws, can't do that. So we need to take those draws and switch them into a payroll payout. If that then doesn't meet reasonable compensation, we have to add to what you've paid yourself for the year, even if that looks like a net zero check where you don't physically take the money, the wage money, but you are in fact at least taxed on it. It's also a tax planning strategy. It can also save you a crap ton of taxes on the distributions and on other strategies that play into that. So again, if you haven't done it and you need to do it, you can reach out. We can just do the analysis for you. You can turn it over to your tax preparer or your tax strategist if you're not our customer. And if you are a customer, we're letting you know right now, we're sending you all the information you need to know about making sure we get that done by the end of the year. Here we go. Information and technology. Back up any important data files or information. If you're working in the cloud, 9 times out of 10 backups aren't necessary because everything's stored in the cloud, but there could be a necessity if you have a private server or some other ancillary type of program that's a software that's on your computer, not in the cloud. You want to back all that up so that you have at least the 24 version complete in case something happens to it in 25. You can start from 24 instead of losing everything. Change any old passwords or update any kind of cadences that you have annually there. Audit your technology inventory. They're also called tech stacks. Do you really need everything that you're using right now? We are going through this exact process in our firm right now, and we have identified 3 of the 5 tools that we are currently using and utilizing and flopping back and forth. We found a software at convention just a couple weeks ago that replaces all of them and does even a better job than those 3 we're doing independently. So we're now streamlining and coming down to 2 softwares instead of 5. So beautiful. And it's costing us less money at the exact same time. So assess any upcoming technology needs. So on the flip side to that, do you need to add technology? Do you need to add workflow, project management, task management? Are there things that would help you really grow and scale if you just had something to do this or that? Are there zaps that you need to create that connect this software to this software that don't talk organically, but the zap can make them talk? Are there workflows? Are there customer journeys? Are there all the things in the world that you need to implement to scale your business or take time, payroll dollar time off of someone's plate so they can do some more revenue generating activity? Even if that's just you could utilize technology that you're not right now to help save you time, make you more money, or just give you your life back, right? Because as business owners, we kind of get buried in our business sometimes. Update softwares and virus protections so that you get the most current version, and if anything goes wrong, you have time to handle it before you hit the ground running in 2025. 2 more sections. Marketing. Brainstorm your marketing ideas. You should already have a holiday marketing plan in place. If you didn't do that in Q3, I advise you to by the end of this week, even if that means Sunday to you, make sure you know how you're going to market your holiday plans, your ideal client, who you want to talk to, who you want to sell to, what targets you need to make your budget. That might mean views even on a reel. I need 10,000 views to get 1,000 interested, to get 100 to take a call, to get 2 to say yes, right? So you might need, if you know those metrics because you're doing your strategic business planning, you need that success of that in order to meet your budgeted goals if you've done all of that work. So brainstorm on that, evaluate in current branding. Do you need to update your branding? Does your brand speak to who you are wanting it to speak to? Who is your ideal client? Has that changed? Maybe 2 years ago, your company looked one way and now it looks completely different, and you really need to market to a different audience because the people you were 2 years ago and that audience is not going to support the business you are today. And that is completely okay. We're actually doing that as well. We have over the years. We started out one way and we have completely shifted what kind of firm we are and what kind of business owner we work with. And there's nothing wrong with that because as your business grows, so does ours. It's an organic evolution that we love to be a part of. Ask past clients for reviews. This is a great time to start using testimonials as your advertising, because you're going to start seeing maybe a dip. Unless you're in an industry where the holidays is your high time, you might start seeing a dip because people aren't spending extra money. They are spending their extra money on gifts, on entertaining, on food, on holiday travel, on everything else. And they stop kind of purchasing for things that aren't necessary in their life until next year. So if you can use customer testimonials, that is the very best way to get somebody to pay attention and either buy now or keep you top of mind for next time. So start asking for those. Hey, you used us this year. Can you give us a testimonial? Send them a link to some sort of Google review page. There's lots of different apps out there that will collect these things for you as well. Ask them just to write it out in an email, and then you turn it into marketing content, whatever you want to do. And then send client appreciation gifts. I truly, genuinely think that this is so, so important. And I love every year being able to send my clients something, a thank you of any kind for their loyalty, for their business, for their trust, for their partnership, really, because without them, we don't have a job, right? Without our customers who need us, we don't have a job. So it's a thank you for all of those things. And it's really nice time. Handwritten goes so long, and yes, it takes time. It takes more time, but it goes so far because no one expects it anymore, that you would sit down and take the time. Now, if you're a retailer and you've got 40,000 customers, probably not going to do that, but can you send them some sort of like text app thank you card, or can you send a mass mailer of something that's a redeemable gift card at Starbucks? Can you do something like that that they wouldn't expect just for being their client? Human resources wise, is your handbook updated? If not, great time to update it before the end of the year and or at the very beginning of the year, especially if you're going to be hiring, expanding your company, you want to dial that in. For human resources purposes, it's very hard to do disciplinary action when there was no policy in place that they knew that they were breaking. So it leads into a lot of messy stuff. So I highly advise doing your employee handbooks. Analyzing your upcoming shift needs and staffing needs, because maybe you need to increase that during the holidays. Maybe you need to pull that back. You might need to do partial furloughs. All of that would be in your budgeting, hopefully, and your projections. You kind of know that's coming if you've done that year over year. Again, if you need help with stuff like this, that's totally our lane, and that's what we do for people. But if you don't need help and you just want to know what to do and have someone tell you, what the heck do I do? Here you go. Stay up to date on state employment laws. They change in some times monthly. So if you're not registering for any kind of updates, you can follow our newsletter. You can request us to add you to our newsletter. We're always putting in state by state updates into our information as well, but make sure you know them going out of 24 if they're changing in 25, particularly minimum wages tend to go up in January. Sales tax rates go up, which affects your sales department as well. So make sure you're keeping abreast of those. Plan any necessary staff training. So is your staff ready to take on either what's going to happen in the rest of Q4 or where you want to go in Q1? How are they going to get there? Is there a team involved? Is there a delegate? Is there a manager? Who needs what training? Figure that out and let's get that taken care of so that after the holidays, people come back and they know what to do. They can just go right to work to start meeting those 2025 goals. Review any changes to employee benefits. That could be a compliance change. That could be that your business is now offering more perks or less perks, and those need to be updated on the employee end. They need to sign off that they understand and that they were told either which way. Or maybe you're adding things. That all takes setup time and process to get going. It's not just to snap your fingers. If you're going to add benefits, you have to give yourself time that those are up and running by January as well. Issue any year-end bonuses. I love this. I hope we all are in a position that we can issue year-end bonuses in our businesses. I haven't always been in that position, so I know that it is sometimes a struggle and you're just barely squeaking by, let alone giving out bonuses. So if you can, wonderful. Make sure they're recorded by December 31st so that you can they're processed by December 31st so you can take full advantage of those as well. If you can't, no worries, but maybe that's something you want to budget for next year. What do you need to do? What do you need to sell? What expenses do you need to cut in order to give you the revenue to offer your employees those perks and benefits for next year? It's all stuff you can think about right now. Anyway, that's it for today. I know we went a few minutes over our time, but again, if you want the free resource, so you have a checklist at your fingertips that you can reference and you don't have to remember everything I said or watch this a million times to capture it all, let us know in the comments and we will send it your way. Our next mini masterclass is actually next week, not in 2 weeks, because in 2 weeks it's freaking Thanksgiving on a Thursday. So we're definitely not going to bring you mini masterclass Thursday on Thanksgiving, but we will bring you it next week. Same time, same channel. We will see you there, and I hope you have a lovely rest of your week and weekend ahead. Thank you for coming. Bye.